Something is happening in the British economy that almost nobody is prepared for. Inflation is cooling, but prices aren't going down. Household debt is at record highs, home ownership is becoming impossible, and a massive wave of redundancies is quietly building. So, if you think things are normalizing, then you're in for a brutal wake-up call. This is the first time in a while where I've kind of looked around and been like, oh, bloody hell, I actually feel uncomfortable about the UK economy. Like, don't get me wrong, I graduated uni during COVID in 2020, but I've never seen a really big crash in the UK economy like people saw in 2008, or even back during the early 90s recession. So, what is actually happening in the UK economy? Well, the first thing, Kane, is that prices aren't going up as fast, but they're staying up. So inflation is cooling down. It's not sitting at 11% the way it was back in late 2022, but prices are still going up year over year. It doesn't mean that prices are falling and going back to 2022 levels or 2021 levels. We're still seeing the price of everything go up. I mean, groceries are up about 30% compared to 2019. Rent is up 25 to 40% depending on where you live, especially in London and the southeast. Energy bills, don't even get me started. We saw them literally double and triple during the energy crisis. But then wages are only up about 15 to 18%. So the cost of everything is going up, yet our wages aren't going up to account for that. So even with lower inflation that we've seen the past couple of years, people feel skint because the price increases have already happened. Prices are staying up. They have not cooled down at all. The middle class, I feel like, is getting completely squeezed. Like the median Brit cannot afford the median home. Monthly mortgage payments are nearly double what they were in 2019 for the same house. And the main reason for that is because interest rates are so high right now. The Bank of England has kept rates elevated, and the only way for interest rates to continually keep getting cut is if inflation keeps dropping, which so far it has been doing slowly. But we're going to need to see the interest rates come down for people to be able to afford housing again, because prices aren't dropping yet. Interest rates have gone up quite a bit over the past few years. The average rate right now for a standard mortgage is somewhere between 5 and 6% from what I've seen. And when you consider that back in 2021 people were getting rates at 1.5 or 2%, that is absolutely mental. And the home ownership rate for young people is collapsing. I saw something recently that said the median age for somebody that is a first-time home buyer is now 34 years old in the UK, which is the highest that we've ever seen. Even compared to just a decade ago, I think it was like 29 or 30. If you go back to the 90s and early 2000s, it was in the mid-20s. Like, people used to buy their first home at 25 or 26. Now it's pushing towards 35. That's insane. I'll try to find a source for that to back it up there. So, the middle class is getting squeezed, and the main point I was kind of making there is that the median Brit that is making £35,000 a year, they definitely cannot afford the median home price of £285,000. It would take years of saving and being very smart financially to get there, especially in London, where the average house price is pushing £500,000 or more. The next thing that is very alarming is that debt levels are exploding. So total household debt in the UK is now over £1.8 trillion. We have credit card balances at record highs, and personal loan defaults are climbing. So people are struggling to make their payments. Credit card balances are just at record highs. Total household debt is at a record high, and many Brits are financially fragile right now. And even a small downturn, even a small emergency of £500 or £1,000 could completely break them. I saw a stat that said something like 40% of UK adults would struggle to cover an unexpected £500 expense. That is genuinely terrifying. So, prices are staying up. The middle class is getting squeezed, and debt levels are at all-time highs. And not only that, but it feels like redundancies are quietly increasing. I've been hearing about a lot of companies that are making cuts over the past few months. I even saw something that said UK insolvencies hit their highest level since 2009. Companies are going bust left, right, and centre. And this has been a brutal period for job security, which should be extremely alarming to people. If you have a job and you are secure in your job right now, be very thankful because it seems like things are going pretty bad. I'm not saying for everybody, I'm not saying for every company or every industry, but for a lot of them, I'm seeing a lot of stuff that is pretty alarming. I would say, especially in regards to tech companies and financial services, it seems like they are laying off people by the thousands. I think British Telecom announced they're cutting around 55,000 jobs over the next few years. Vodafone is cutting 11,000 globally. We've seen cuts at Meta's London office, Amazon's UK operations. Even traditional British companies like Lloyds Banking Group have announced massive redundancies. So we're seeing some pretty sizable layoffs here. This isn't just like a few hundred people at a massive company. This is like, thousands of people at these really large companies. So it is impacting a ton of people. So why this feels like a crisis is because people are feeling higher prices. They're feeling higher debt. They're having slower wage growth. So they're probably tapping into more debt because of that. And the worst part is when you go to borrow and use that debt, you are now in a higher interest rate environment and there's less job security. So this is why this stuff feels like a crisis. I mean, it's pretty alarming. Now, do not get me wrong. I'm not just here to fearmonger you guys. I do believe that there are some things we can be doing to protect ourselves, and I'll talk about that at the end of this video. So, that is where the UK economy is at, as of right now. But I also think that this is going to turn into a bigger financial crisis. Now, I'm normally not the type of person to try to sit here and predict where the economy is going to go, because at the end of the day, this channel is about building wealth and doing well for yourself long term. And I follow two very simple rules here. Live within your means, and then any leftover money that you have, invest as much as possible, as consistently as possible. But when I look around, I look at the job market and I look at, the amount of debt people have, the total cost of things, wage growth, all of these things. It is pretty alarming. So I do think this could turn into something pretty bad. Again, not sure, but this is just my prediction. Part of the reason I think this could turn into a financial crisis is because we have high prices plus high interest rates, which that is just painful. That is a brutal environment to be in. And the reason that we have high interest rates is because the Bank of England raised rates aggressively to fight inflation. This was like throughout 2022 and 2023, we saw year-over-year inflation hitting just record highs, peaking at like 11%. And part of the reason we saw so much inflation was because of the money printing during COVID, the furlough scheme, all the stimulus, plus the energy crisis from the Ukraine war, which hit Europe especially hard. So basically, what was happening in 2020 as well as 2021 is that the Bank of England kept rates at historic lows, which then increases borrowing and spending. They kept rates low because they knew that they needed to stimulate the economy because of COVID. We had the furlough scheme. We had bounce back loans for businesses. Money was flowing everywhere. And then 2022 happens. Energy prices go mental, and we see massive inflation. The Bank of England then now has to raise rates to lower the rate of inflation over time, which we have seen. Inflation has gone down, but year over year, inflation is still going up. Like, you're still seeing prices go up 3 to 4% year over year, which is not as bad as 11%, but it's still year over year growth. We are still seeing prices go up. So because we are in a high interest rate environment, that means that borrowing is now more expensive. So that goes for credit cards, mortgages, car finance, anything that you are going to use debt for, it all costs more money because interest rates are higher. And the thing that is so brutal about this is that Brits kind of got hooked on cheap money. And what I mean by this is from 2009 to 2022, the Bank of England had very low interest rates. It was very easy to get loans. We had furlough money and COVID support. The stock market and property markets were just absolutely pumping over the past decade. And people, I feel like, got used to winning financially without trying. Now, I'm not saying that 2008 wasn't bad, because it absolutely was. Like, that was a brutal recession that we saw. But the era of low interest rates and cheap mortgages and that sort of thing, I don't know if we're going to see that again. Hopefully we could see lower rates again, but we'll just have to see how that turns out. It seems like that era might be over. So, people were addicted to cheap money. The next reason I think this could turn into a financial crisis is because companies are cutting back pretty heavily. Because there are higher rates, that means that there is less borrowing. Because if a company wants to go borrow, let's say £100 million, and they have to pay a higher interest rate for it, they are less incentivized because of these higher rates. And so because the cost of debt is higher, what we are going to see from a lot of companies is they still want to do well on their earnings. They still want to impress shareholders. So they need to cut expenses and increase revenue as much as possible. And one easy way to cut expenses is to have a lot less hiring as well as having more redundancies. And I actually work at a large company and we are cutting jobs quite heavily. This is a very common thing, it seems like, across the board. And a lot of companies are lowering their investment amounts. Don't get me wrong, some are doing really well and they're growing. But it seems like besides a handful of successful companies, a lot of major UK employers are not doing that well. So we are seeing a lot slower business growth. And like I said before, we saw a ton of insolvencies and job cuts, which is pretty alarming. I really hope that, the economy can bounce back. We will have to see here. But also, housing is just completely out of sync. And I've even talked about that in a couple of videos now. We have people who are locked into 1.5 to 2% mortgage rates. And they're not going to sell their house, because why would they go sell their house for £400,000 at, let's say a 2% interest rate and go transition to a £500,000 house with a 5.5% interest rate? I mean, that monthly payment would be so much higher. Nobody wants to do that, and I completely understand why. So, you have a group of people that are locked in at these really low rates that they got back in 2021 or earlier. They're not going to sell because they don't want to have to go buy back in that same market. One thing I still don't really understand is it seems like the housing inventory has just stayed low. Like, I don't know why they are not building more homes, or I feel like there should be incentives to build more homes. The government keeps talking about building targets, but nothing seems to happen. That way, the supply of housing would increase, which would hopefully lower prices over time, or at least make things a little bit more affordable while rates are still high. But we haven't really seen that so far. Planning permission is a nightmare. NIMBYism is rampant, and it seems like prices are staying high. And so this is just crushing people like Gen Z who are, first time buyers. So all these different things are happening, but also the government is just drowning in debt. The UK national debt right now is over £2.7 trillion. That's over 100% of our GDP, which hasn't been this high since the 1960s. Interest payments alone are costing the government over £100 billion per year, and that's more than we spend on education. And so the hard choices here, from the government's perspective, is they have to either raise taxes, cut public services, or try to grow the economy. And each option makes life harder for normal people. We're already seeing it. National insurance went up. Council tax keeps going up. The NHS is in crisis. Public services are stretched thin. And it feels like we're paying more and getting less. I feel like part of this crisis that's going on is people just don't have confidence in the United Kingdom right now. We don't trust the economy. We don't trust the housing market. We definitely do not trust politicians, regardless of which party is in power. And so when confidence drops, we will see behavior change. Spending will change. Investing will slow down and the economy will stall. So what could happen next? And I'm not trying to sit here and paint this, brutal doomsday thing. I'm just trying to talk about a couple realistic scenarios so that we can be prepared. So the first scenario I could see happening is we just have a slow, just a brutal, slow burn recession where it's not a crash, where, things tank over a month or two. It'll take a long time. Things will slowly drop. It's just a long period of struggle. You have flat wages, you have higher prices, so more people are falling behind. The next thing that I think could happen is we see higher unemployment. Companies are continuing to try to cut costs, and the easiest way to do that is to lower headcount. And that basically just means not backfilling any positions, not hiring for any new roles, and also just trying to make people redundant where you can so that you can cut expenses there. And the people that are going to feel this the most are people coming out of uni, people who are entry level or even out of sixth form, just younger workers. They are going to feel that pain first because a lot of companies are going to be cutting some of those lower end jobs. Again, this could happen in any part of the company, but I do feel like entry-level workers will definitely feel that hit pretty bad. I've even talked to quite a few people that are a little bit younger than me. I'm 27 and I've talked to a couple people that are, 22, 23, 24, and they're all saying that the job market right now is just atrocious. Graduate schemes are being cut. Companies that used to hire hundreds of grads are now hiring dozens. And the competition is insane. So I'm definitely sorry to hear that if you guys are struggling with this right now, because it is very hard to endure a rough job market. And so, going off of that, the next thing that could happen is that we could just see a housing freeze where we have very few buyers, very few sellers, and there's just basically a stalemate. Nothing really happens until rates start dropping more. So that's another thing that could happen. And on top of that, we could just see interest rates stay higher for a longer period than people expect. If inflation does not continually drop, then the Bank of England might have to keep rates elevated. And they're trying to avoid another 1970s style stagflation situation at all costs. So we really need to see inflation continually dropping here. That way, the Bank of England can then turn around and cut rates, which will help a lot of people. And then the last thing, and we're already starting to see this a little bit, is that markets are becoming a little bit more volatile. It seems like one day the markets are super green, the next day they're very red. The past couple weeks or so, past month, I have started to see that a lot more, which for me, I'm not panicking at all because I'm a disciplined investor. And anybody that watches this channel, I really hope that you are too. If you are not, watch some of my videos. I'm telling you they will help a lot when it comes to investing and really building wealth long term. But if you're an emotional investor and the markets are volatile, you're having a bad week, you're having a bad month, you're really struggling because the market's just all over the place right now. So, if you got this far in the video, thank you for still watching. Now, let's actually talk about how do you protect yourself. Let's talk about what you can do to really set yourself up so that you are not getting just destroyed in this economy, especially if it gets worse. I want you to put yourself into a position where you can thrive and do well. So, the first thing that you can do is start by trying to strengthen your own personal balance sheet. What I mean by this is get rid of any high interest debt. Start building a small emergency fund. Even if it's just £500 or £1,000, whatever that looks like for you, this will definitely help. And the next thing you've got to do is avoid lifestyle creep. This destroys everybody, especially young people, when your income starts to go up over time. I can make an entire video talking about lifestyle creep, but basically, what I'm saying is, if you get a promotion or if you start to make more money, do not spend more money. Try to keep your expenses as flat as possible and make sure that you're living within your means. So that's the first thing you can do. The second thing you can do is try to become redundancy proof. What I mean by this is build skills that companies cannot easily replace. Focus on skills that are either cutting costs or they're revenue generating, or there's something that you're doing on your team that nobody else can do and you can't be replaced easily. But also make sure that you're keeping your CV updated. Keep your LinkedIn active. Try to build a network before you need to lean on that network. That is definitely important. So really try to focus in on what skills you can develop that are extremely valuable to the company and couldn't be easily replaced. Or even if they did try to bring in somebody to replace you, it would take them a while to pick it up. Try to be as valuable as possible. The third thing I would say is use volatility to your advantage. The wealthy people do this and the middle class does not. When the market goes down, that means you buy more. When the market goes up, you ride the wave up and you keep buying. And so keep things very simple. Diversify your investments. Just buy global index funds. I like something like Vanguard's FTSE Global All Cap or the FTSE 100 tracker. Just invest into index funds and make sure you're using your ISA. You get £20,000 a year tax-free, which is massive. Use it. And I pound cost average, which definitely beats emotional investing. And all I'm saying when I'm saying pound cost averaging is I just invest every month when I get paid. It's really that simple for me. So you can absolutely use volatility to your advantage. I might even make an entire video talking about this if we start to see the stock market tank more. So far, it's been up and down, but that's the third thing you can do. The next thing you could do is try to increase your income. And this is the most important part. A lot of people stay broke because they focus so much on expenses. But I feel like winners long term focus on income. So there's a couple of ways to grow your income. The first one, and I know this is maybe not realistic, but sometimes it is for people, is just ask for a pay rise. Show data and show proof of all the different things you're doing and working on and the value that you're providing to the company. And try to ask for a rise, or maybe just get a little bit larger rise than what you're already going to get if you can. It never hurts to ask. The worst thing they could say is no, and you're still just going to get the same rise you were going to get before. The next thing that you can do to grow your income, and I know this is hard right now with the current job market, but if you can pull this off, it could definitely work. And that is to switch jobs every 1 to 3 years for higher pay. This is 100% the way that I grew my income a lot, was just by switching jobs every couple years, because at the end of the day, the new company you're interviewing for, they don't know how much money you make. You can negotiate your salary a lot easier with them because they don't know where you're already at. Compared to when you get promoted, they know exactly where you are and they know where they're going to put you. Compared to when you go to a new company, they don't know any of this stuff. So you have the advantage and the leverage on your side. So switching jobs definitely works. But again, I know the job market is brutal. That is so much easier said than done. And like I said, a ton of companies are making redundancies right now. So you do want to make sure that you're getting hired with a company that has pretty good job security. The next way to grow your income is to try to start a skill-based side hustle. So whether that is some hobby that you have, whether it's photography or tutoring or something you could do to maybe sell yourself, whether it's a product or a service, something that you can do to just make a little bit of money on the side, that will always help you. Or if you don't want to do the side hustle, you could also just try to learn something that increases your hourly rate. There are a lot of companies and a lot of jobs where if you get certain qualifications or certifications or, learn new skills, this will actually increase your pay and you can then make more money, which is always really nice. So overall, what you want to do is try to build a recession-proof life plan. Live below your means during the good years. Stack cash when things feel easy. Definitely have that emergency fund ready to go for when you need it. Invest automatically through your ISA or pension. Try to make it as simple as possible. And don't make big emotional decisions when the economy is unstable. Try to stay calm. At the end of the day, you've got to look long term. Don't even be thinking about 2025. Think about how you can get to where you want to be by 2028 or 2029, even 2030 if you need to. Because every economic downturn in UK history has eventually led to higher markets, higher wages, and more innovation. And downturns create opportunity. This is where the future millionaires are going to be quietly built. And so, yes, I do think Britain is entering a financial crisis. I don't know when this will actually fully hit, but I'm already feeling like I'm starting to see it. But this doesn't mean that we're all in danger. There are definitely opportunities and turning points. And there are moments where people who stay disciplined leap ahead of everybody else who panicked. And do not fear what is coming. Just try to be prepared for it. Again, I could be wrong about all of this, but this is just what I'm seeing. And I do think if you are prepared and you are ready ahead of time, it is going to make this a lot smoother for you. So, I hope you guys enjoyed this video. If you did, drop a like down below. Hit that subscribe button. I'll see you in the next one. Cheers.